I believe in this theory called the outsource theory. Meaning that leveraging, because of the fact that it's an asset that is recognized internationally, is a property that banks love it as a highest level of collateral, because it's a physical asset that they can actually confiscate if, let's say, you fail to make your monthly mortgage. So technically, because of this status of property being an asset that is recognized internationally, and banks love the leveraging point to issue you a mortgage loan, you can outsource this risk to insurance, because that is why mortgage insurance and term insurance can technically be used as an instrument to cover your risk of owning the 75% so-called good debt, in the sense, the mortgage. Because in any essence, if you have $1 million, you keep $750,000 in your bank and use this to pay for your monthly installment. Of course, there's interest incurred. And take note that the interest for a property is very different from interest from personal loans and things like that. Because interest for real estate is calculated until the day that you sell the property. So if you take a 30-year or 25 years loan, if you sold the property at the 10-year mark, you're paying interest up to that 10-year mark. Of course, there is like a amortization kind of figure, but real estate is one of the best form of leveraging tool in terms of the interest balance with your principal. Okay, so coming back to the outsourcing part is that you should take a $750,000 mortgage insurance against your $750,000 mortgage loan, because if, let's say, tomorrow, touch wood, something happened to you and you pass away, technically speaking, the mortgage insurance can cover that debt fully, and you don't have to pass that risk to your family. Now, and your $750,000 in the bank is still available as an inheritance for your family, rather than the fact that your full $1 million is trapped in the property that your family is staying. And if you were to pass on tomorrow, there'll be no money in your bank, even though you have a fully paid property, but maybe your family will have to sell that property in order to enjoy some cash to sustain them for the next 30 years. But rather, if you use mortgage insurance to cover and outsource that risk to the insurance company, you will have a fully paid property and you still have $750,000 that you can pass on to your spouse and your kids. So that is the outsourcing benefit.
The mortgage insurance that, of course, that we mentioned over here, right? Please do not go and get mortgage reducing insurance that tags on to a specific property. Don't go and get whole life kind of insurance. We are talking about specific term insurance. Because why we use term insurance? Because this is probably not the only property you're going to own, right? So mortgage insurance that is tagged to the property, right? Once that property is sold, the insurance ends. So what we want to know is, of course, insurance, we know that when the younger that we purchase, your premiums is lower. Second thing is, when we grow older, there might be additional health conditions that might not help us to cover certain things. So that's why term insurance is better. Most value for money term insurance mean, if you are a Singaporean, just go for the group insurance from your MINDEF. It's only like less than $100, you can cover $1 million. That's the lowest term insurance coverage. So everybody should get one.